Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, September the 25th, 2013. Looking at the Dow Jones Industrial Average today, it basically tells the story what's going on in the rest of the markets as well, so we don't need to look at everything. The main thing here, looking at the Dow Jones Industrial Averages, today's activity was interesting. Intraday, you had a little bit of a bounce here, looking like a hammer candlestick climbing back up here. Everything would have been fine if we'd closed like that. That would have been a signal for a buy, looking for confirmation the next day and start to move higher. By the close, we do this instead. We continuation down to the downside. And this is something to pay attention to whenever you start to see that happen. You can still just easily flip again tomorrow and turn bullish, but you may be doing something else as well. And so let me show you how this works. Let me get the right tools out. Okay, so I've just added the Fibonacci retracement lines, and what this basically is, and I don't use them very often, I can just spot it by looking at the chart, and you'll get that way over time. But the main thing is when you pull back here, and at this point you start to see a little wick out of the bottom, and intraday we started to try to pull a little hammer candlestick formation. This was what we call the bare minimum of a pullback that you would expect. That is down to the 38% line right here, this blue line right here. That's what you'd expect. You bounce off that. This would be the bare minimum that pullback that we would accept as being called a pullback, and then we would see any kind of reversals or buy opportunity, testing the previous highs over and so on. But we prefer more than that, and typically you'll get a 50% retracement, which is down to this blue line right here. And so that's what we were bouncing off of today when we saw that little intraday activity where we sold off and then we turned around and started to climb back up. That's what I wanted to see. This is preferred method. Now there's also cases where you will fall below that, and you will fall even lower, down to the 61.8%, and you can even go back and retrace 100%, but this is the unlikely case scenario I've been talking about. However, in this situation right now, when you look at this chart, what we're actually seeing here is that the concept of the debt ceiling is weighing on the markets, and that's why we're really not able to hold into the close any kind of a reversal. We're not, at least not thus far. We keep shaking that off and we keep driving lower. It's on low volume and everything else, so it's still a pullback, but that's the news that's driving the market right now. So got to keep an eye on that. In this scenario, you still don't buy. I mean, there's what we've been looking for is an opportunity on the pullback, but we needed a hammer candlestick. Didn't form here, so we just sit there and watch. It goes down a couple more days, starts to form again, doesn't do it. We keep watching. That's all we do with it. We don't have anything to mess with this until we see a reversal signal. Now, it doesn't have to be a hammer. You can have situations like this where you have a bullish engulfing into the previous candlestick. This one was bearish. The following was bullish. This is just kicking, it's moving sideways before a breakout happens. In this case, happens to the upside. You can see the same thing happen here, but again, wait for that. Don't get involved until that happens. Right now, you're seeing a lot of your positions being stopped out on the long side. That's fine. Just sit back and cash and wait for a good quality opportunity. The further she falls, the better, because in this situation, if you just keep driving lower on fear that, well, maybe the government's going to shut down. Yeah, right. That's going to happen. They're just going to say, you know what, we're tired of taking your money. Go ahead, here you can have it all back. That's not going to happen. So reality is they're going to kick and scream about what they're going to do, and in the end, they're going to solve the issue just like they did last time, and the time before that, and the time before that, and then we're going to turn around and bounce big to the other direction. So look for that opportunity. All right, a quick glance right here at the TNX, the 10-year Treasury Note Yield Index. And this one, again, TNX, we saw the pullback here. First, we had this big move here. We told you that was a buying opportunity. You could use this buy opportunity here, and you pull back in this one, or you could wait for a breakout above this blue line here. That would be a buy opportunity as well. You got that. We pulled back here. We told you that was also a buy opportunity. All you were doing was testing previous resistance to find support, and that was an opportunity as well. And then we started to get up here, and we saw this guy here. And so we said, all right, it's time to advance the stop loss limit because we could break to the downside here in case they do something we didn't anticipate with the Fed, and that's exactly what happened. She breaks down, we start to move lower. When we come down to this point here, I do not buy it in this situation because, again, we're breaking down. We're getting lower lows and lower highs. And then also we don't have a hammer candlestick formation. So this is just the start of a bigger problem. When you expand out to the long-term chart, you can see it's even more precarious and not a reason to be a buyer here. And that's why we're selling off here. I didn't take it as a short opportunity either because I don't have a sell signal right here. All right, this is a quick look at the TNX weekly chart, and this one goes over to the past 2 years. So you can see what we're looking like now on this one here. We have this massive move to the upside where we traded that, made some money, but again, long-term chart shows the ultimate oscillator low point, high point here, higher high here. This is trending down. The same time period, price was trending up. What does that tell you? Bearish divergence that can fall apart. That's exactly what happened here. And so leave it alone. Would I sell it? No, because it's counter trend trade. This is still a series of higher highs and higher lows. And so we're doing this number. This pullback is still within an overall uptrend. You can pull back in various different levels. You can come back and pull to this point here. We had previous resistance point here and here. And that would just simply be a test of that resistance. But now we find support. So I'm looking for that. Could that happen there? You may come back down here and just bounce off of that and then make a shoulder formation like you were seeing before. Like you had this shoulder here, this head, and then another shoulder. You could do that scenario. There's a lot of different things that can happen here, but right now we're still in a bullish uptrend. You may even come down here and just sell off all the way down to this point and clean that up. Make sure you guys can see what I'm talking about. High point, like this, like this. You could come back down to the 50 period moving average if you were really, really lucky. Get a nice hammer reversal signal, kind of like that there, something like that, and then you'd be using that as a buy opportunity to test the previous high, and so forth and so on. So again, there's various different scenarios that could happen here. It's not time to start getting all really bearish, but it's definitely not time to be looking for an entry opportunity way up here. Wait for it, see where a good quality entry opportunity happens. Like wait for this ultimate oscillator to pull back down to 30 line, things of that nature. Gold and silver we talked about yesterday. They had a good day today, and we talked about that for you yesterday. So the buy signals were setting up. We're looking for confirmation that happened today, so that's something you can check out. If you're looking for my personal market charts, gold, silver included, you can simply go here to click right there. They're updated nightly with my annotations, the different signals, will stop loss them, and so forth and so on. Dow 30 alerts will be the same way. We have several of those that we like. However, they're not going to set up or not going to confirm without the, if you see the Dow Jones breaking down, Dow Jones Industrial Average breaking down, that's the average. And so if it's pressing lower, then these guys will as well, so you wouldn't be getting involved there. So we're just basically sitting and waiting and watching cash. But you can always go here and check them out. I update them nightly, and there's various other opportunities and tutorial videos here on the free website at perfectstockalert.com. All we ask in return, please refer a friend. And for whoever sent me an email asking which video you should start with to become a better trader, all of them. Last but not least, the chat room should be up in a couple of, well, if not tonight, it'll be up tomorrow, okay? God bless, take care, and I'll see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.